morning here with Beyond the Sensex. That's a picture as far as the frontliners are concerned, but let's go away from all of this and get to the real action in the mid-cap and small-cap side of the market. Let's tell you what's happening in the indices. As we were pointing out, there is relative outperformance, and the BSE mid-cap and small-cap, both of those indices right now in green territory as we speak, while the frontliners are still battling in red. So we're looking at modest gains, just about 0.2%, 0.3% up on both of these indices. There is more stock-specific action, and it's really earnings-oriented in this space if we talk about it. But we'll get to all of that action in just a bit. First, now let me go across and welcome our guest on the show. Harendra Kumar of Centrum Broking joins me in the studios to take us through the next half an hour. Harendra, morning, and thanks for joining us. A new month, a new series, earnings season is also over. How are you feeling this morning?
I think we're kind of settling down, and market has priced in the slowdown, and there's some amount of consolidation happening. So I think we're closer to our bottom now, anywhere around 12,500. So we'll see some amount of stability from here on, and maybe some optimism returning in terms of earnings, and we have some hang off on the margins are going to move ahead. How the sales. So I think maybe we'll languish for a month or two, and things should stabilize and move upwards from there on.
I'd just quickly like to point out a couple of companies from the mid-cap side. Again, earnings-related plays and very, very different kind of numbers coming through. And let's tell you how these stocks are doing. Now, on the losing side, we got numbers from textiles major Raymond. They went into a net loss. In fact, it was a loss of about 41 crores versus a profit of 5.3 crores in the last quarter. Stock's been suffering because of that. So that was one disappointment. Raymond's now down 3% as we speak. Then you had the entire lot of the entertainment companies, be it PVR, be it Inox Leisure, or be it Ad Labs. A lot of these companies showing a dip in their bottom line and lower occupancies. All of these stocks are down between 1 to 3% this morning as a result as well. So that's what we're seeing in these couple of companies. Blue Dart, of course, was one interesting performer yesterday, and they managed to come out with good numbers, in fact much ahead of the expectations, and also a handsome increase over the last quarter. And that's why Blue Dart as a play is today holding up in the morning trade. It's up about 3 to 4%, the Blue Dart stock. So Harendra, I mean, this is just a snapshot of what came out yesterday. Overall, how have you read the mid-cap performance? It's not been a steady one-way increase as what we had gotten used to in the past so many quarters.
Yes, clearly you'll see that now you can figure out that we are not into a bull run or very secular GDP growth. So clearly the management differentiators are going to play out here. The ability to manage costs, my ability to push for sales, and strength of your balance sheets. So not only in the mid caps, I think in large caps and mid caps the differentiation will be felt. Be it banks, be it companies in the cyclicals. So this differentiation over the next 2 months is going to play out, and clearly the stronger companies are going to see the multiples moving away from diverging from whatever the average is. So I think earnings and clearly the ability to deal with the challenging issues will get a premium. And these are the guys, or these are the companies who are going to recover faster the moment the economic cycle turns. So I think this is the time where you're going to be more bottom up, selecting your stocks closely rather than going in for a sectoral buy.
Okay, sure, fair enough. Well, we'll take a short break to get back in green territory, rather get in green territory, because we started off down from the word go this morning, but now we're up 3 points on the Sensex. Nifty is still under a bit of pressure, down about 11 points or so as we speak. Harendra, quick question to you on the banking side. We've seen more rate hikes come through from the banks, followed by the RBI move. How are you viewing this space right now, and what would you do with mid-cap banks in particular?
See, I think larger banks are better placed to withstand the shocks. That is number one, because at least they have a wider client base and a stronger franchise. The smaller and mid-cap banks are likely to be more under pressure because they don't have the depth of the client base, or the franchise for that matter. But valuations have come to historically low levels, and I think some of them have taken a hit on MTM provisioning, and there's a slowdown in other income as well. I think probably for the next 1 quarter you should be probably cautious and stick to the larger ones. Because on valuation fronts, there's not much differential left between mid-size and large cap banks. So I think we would stick to the large caps at this point of time.
Okay. All right. That's a wrap on Beyond the Sensex. And I also have to thank Harendra, you at this point in time. Thanks very much for coming in today. Well, that's a wrap on the show, but do stay tuned. News at noon carries all the action forward.